I wanted to thank you for joining me on this episode of Doing Insurance Right. My name is Scott Jenkins. I'm your host. I'm a local farmers and insurance agency owner here in Ahwatukee, Phoenix, Arizona. Just wanted to go over you today on how much life insurance do we actually need. There's a couple of schools of thought on this. The first one's going to be a pretty simple 10 to 12 times your annual income. And if we don't have, let's say we do have a stay-at-home parent amongst the mix, putting a dollar amount on what they bring to the table, such as maybe childcare, taking care of the house, outside chores, running the household, things amount, how much is all that going to cost you? And then doing 10 to 12 times the annual amount on that as well. The other one is pretty simple, one to figure out that we're going to go through today. It's basically the first thing we're going to take all of our debts. So basically we're going to do everything but the mortgage here. So we're going to go through if we have car loans, how much are those, credit cards, whatever other outstanding debts, personal loans, any education loans, things of that nature. Basically any of those, we're going to take that and add up all those together. So we can run an example if you'd like. Let's say we have, $40,000 worth of that. The next one is going to be income. So in this one, instead of using a variance of maybe 12 times, we're going to use 10 times the amount. So if we make $100,000, that would be $1 million. Let's say we make, for example, $60,000 a year. So let's take that times 10, and then we're going to have $600,000. So the next one we're going to do is the mortgage itself. So let's say we have $200,000 is what we owe on the mortgage. And then the last one's going to be like a funeral expense, and then also education for kids. How much is going to cost them for higher education? So let's say the average funeral cost, is going to be $10,000 to $20,000. So, it's going to, let's say $20,000 there. And then education wise, even if they get some grants, scholarships, things of that nature, the price of education is obviously going through the roof. So if we're at $50,000, maybe as education there. So maybe $70,000 total in that income or in that area. So if we add up all those together, so we take our debts, which we said were $40,000. We took our income times 10, which is going to be $600,000. Let's say we owed $200,000 on the mortgage. Now we're up to $840,000. If we throw in $20,000 for burial or final expense, then we're up to $860,000, and then we're at $50,000 for education. So that would put us at $910,000. Now, when we're staring at that number of $910,000, obviously that's a big number, right? So that seems like a lot. It may be a lot. It may not be enough, but this will get us some income, the mortgage taken care of. It'll also get us, final expenses, and then any debts that we have to try to get as close to debt free as we possibly can, for leaving back the survivors, our family, wife, kids, husband, kids, so on and so forth there. So that $910,000 though, as we discussed before, does not have to be all in one life insurance policy in order to make it cost effective for you. We can split that up into multiple policies. Maybe some of it goes into a whole policy or an index or a universal life policy in order to have some cash value with that as well. Here's the thing with the whole policy. Obviously, $910,000 is going to be a lot of money per month, and most people can't afford that. So therefore, we're going to need to supplement with term insurance as well, because it's a lot less expensive for maybe shorter term. So for example, maybe our mortgage in 20 years is going to be zero. So at that time, that $200,000 that we have now doesn't need to be at $200,000 20 years from now. Maybe it needs to be at a lot less. Maybe there's only $10,000 worth of mortgage or $50,000 left on the mortgage, so we don't need quite as much. So it's a good time, good to review that as well. And then income wise, are we making as much money or more money than we were when we first originally got the policy? So it's always good to supplement our whole policy or our permanent policies with some term to make sure we have enough death benefit coverage in case the worst happen. We do not want anybody to pass away. I don't want any of my clients to die. But there is one thing guaranteed in life, and that is that we are all going to pass away. So why do we not want to take care of our family and make sure that they have enough to get through? But this does change quite a bit. So, supplementing or having multiple policies, if we're actually being covered correctly and throughout the years, you're going to have multiple policies. So just don't be scared of multiple policies. Most people have them. Most people do get, but a lot of people get scared by having multiples. And if they have one, they think that's enough and that'll have to be it. But let me ask you a question. You're 45 years old, like myself. You pass away and you have a mortgage, you have some debts. You have a child that hasn't went to college yet, but they're getting close to college age. Do you want them to be able to go to college without having to take a lot of debt on? Do you want your wife or husband to be able to live in the same house that you're in? Do you want them to have to downsize dramatically? It's hard enough as a life-changing event if somebody passing away in your family, let alone having to deal with all the financial headaches and burdens as well. And keep that in mind. The reason for a lot of the income is there's probably going to be some time taken off. It's not really easy to go back to work right after a loved one passes. There might be some, maybe we need some therapy. Maybe we need just some time to get away and kind of regroup ourselves, so to speak. So a lot of those are the key factors in figuring out exactly how much life insurance we actually need in order to cover ourselves for the sake of our family that we leave behind. So I wanted to thank you for joining me on this episode of Doing Insurance Right. As always, if you could rate, review, or subscribe to whatever great platform you're listening on, whether it be Apple, Spotify, Google, iHeartRadio, Stitcher, any of the great platforms that are out there, I would greatly appreciate it as it does help the podcast grow and the word get out there. And I look forward to seeing you on the next episode.